Good afternoon. This is Tom Alexander. It is Sunday, May 5th. It is about 4:30 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly weekend update for the week beginning Monday, May 6th. And we're going to cover the stock indices as we usually do. By the way, if this is the first time finding me, I would very much appreciate it if you would like and subscribe to typical YouTube things. It helps grow the channel, which I'm trying to do. Also, if you're interested in this material, you can go back and you can see much more by going to the website, which I'm going to share with you. This is www.alexandertrading.com. There's free stuff here. If you click on weekly update, what you will see are weekly updates going back for months. You click on, and I don't have the current one posted. I will by the time you listen to this, but you click on it and then you get the weekend report for the previous week. You can see the methodology. I try to give actionable information, but I also try to teach and explain how to analyze and trade markets based on auction market concepts, strictly price action, market profile. Market profile is a charting format. It's not magic, and it's really it's just a way of organizing data. But the real key, in my opinion, to understanding markets is to understand price action through the lens of auction market principles, and that's what I do. So let's take a look at where we are as we head into the week of May 6th, and we'll go through each of the indices, and we'll start with the S&P. Now, we had the huge gap up on Friday. We had earnings last week. We had of Apple, which drove the market higher. We had market participants consider finding economic reports friendly. So up and away, it's all good. Instead of going to zero like everyone in Twitter thought 2 weeks ago, now we're going to infinity. That's the current narrative on Twitter. So where are we going? Well, the momentum is higher for sure. There is nothing between Friday's high and this level at 51.67, 51.77 basis the SPX, the S&P cash. Now, could we stop anywhere in here? Absolutely, we could. I am not a member of the magic number crowd. I don't use fibs, all that other stuff. I think basic technical things work, like measured moves, trend lines, and then, of course, my primary form of analysis is just price action through the lens of auction market principles. So we have this large gap here. Now, for me, it's pretty simple. And this is the indices are pretty much in lockstep here in the short term. So what should happen under a bullish scenario? Well, what should happen under a bullish scenario is that the market continue higher early next week. Now, what would invalidate that, what would bring a bearish case into view, is if the indices close below last Thursday's low. That would fill this gap, and it would erase the bullish tenor that is obvious in the market through Friday's close. So that's the line in the sand to the downside. Now, where could this market retrace in here? Yeah, absolutely. Who knows where it could stop? I'm just saying this should not happen under a bullish scenario. Closes below last Thursday's low by all four of the primary U.S. trading indices. Okay, what's the bullish case? Well, the bullish case here, and I outlined this 2 weeks ago. Again, you can go to the website and you can look at the weekend report for the week that ended 4/19. But on 4/19, we had some technical readings that were as extreme as we've seen really in well over a year, specifically the 5-day moving average of NYSE advancing issues. I suggested that weekend that we could be very close, if we had not put in an important low, to putting in a potentially very important low. It's possible that that low is going to eventually lead to one or more of the indices trading to a new all-time high. Doesn't have to happen, but it certainly could. So we'll just take it one step at a time. Now, I do not think we'll just trade straight from Friday's close to new all-time highs. I think that if we do trade higher early in the week, we'll probably have some sort of short-term top that in this general area. That would be my guess. Now, what's a short-term top? A short-term top leads to something maybe not more than, or not much more than, a 1% retracement. And then we, form a few days and then go higher. That's the bullish scenario. Now, the other indices, again, are pretty much in lockstep. Well, let's look at the index. So the level in the index is up here, 18,123, 18,170. This is Thursday's cash low. We look at the Dow, the level right here, 38,930, 39,50. To the downside, 38,229. And then Mr. Russell, which is sort of its own animal for all the various reasons I won't get into. But nevertheless, short term, everything is in lockstep, which is what you look at. Now, one thing that's a little bit interesting about the Russell, and again, it is its own animal. It can trade very differently than the other three. But it did not have a pretty close on Friday. It closed closer to its cash range low than did the other indices, which closed near their cash range highs. Okay, so from a structural perspective, the indices look favorable. They look positive. They look bullish. Now, again, I would not expect the market to trade straight higher to new highs from here. I would expect to see some sort of short-term top by early in the week, certainly by Wednesday, and then we chop around, form 2 or 3 days of balance, and then we'll take a look at it at that point in time. Okay, if we look at the technical situation of the market, let me find the technical situation of the market. Here we go. We'll start with breadth. And what you see here, this is the cash, this is the SPX. The red line is the 10-day moving average of NYSE advancing issues. The green line is a 5-day moving average of NYSE advancing issues. And this is the reason right here, on 419, we reached a level in the 5-day moving average of advancing issues and pretty close to an extreme in the 10-day that we had not seen, well, since the October low, and then even further back than that, really. So we could easily now, in one or more of the indices, trade to a new high before something bearish begins to occur. We don't have to do that. There are levels to the downside that would invalidate that and would flip the probabilities from bullish to bearish. Right now, the probabilities are bullish, not bearish, but that can flip. And if it flips, then we'll take a look at it at that point in time. I depend entirely on price action to tell me what the market is doing. I don't use Elliott Wave. I don't use Fibonacci. I use price action. Price action is what we trade. Price action makes or breaks our account statements, and it has to validate or invalidate any narrative, fundamental or technical. Right now, it's bullish, bottom line. Okay, another piece of the technical picture, and I use very simple things. I don't use a million different things. This is VIX. Now, the blue line is the closes of VIX. And then I have moving averages above it. But you can see VIX last week absolutely took a nosedive. You have the SPX below it. And, if we continue lower at this rate of change, it's obviously very bullish for price action because a dropping VIX is almost always accompanied by rising prices. So I would expect to see right now, everything in the market looks bullish as long as we do not close below last Thursday's lows. There could be some chop and churn and minor retracement. And frankly, I would expect to see almost immediate further strength next week, as opposed to an immediate pullback, until we reach those key reference areas that I have highlighted earlier. Now, by the way, all of you should have received a written report. The written report is on the website. I send out a newsletter each week that is free. If you're not on that list, you want to get on that list, please shoot me an email, tom@alexandertrading.com, and say, please put me on your list. I don't sell lists. You won't be inundated with 7,000 emails from me all week long. I tend to I'm sort of a minimalist in that regard. So, but if you want to get the notification of when I do send free stuff out, shoot me an email. I'll put you on the list. You guys enjoy the rest of your weekend. I'll speak with you again soon.